5 a.m. in New York City, 10 a.m. in London. Good morning, I'm Vonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. Fresh attacks in the Middle East. The U.S. strikes Iranian military targets for the second time this week. Stocks slip on doubts over an imminent end to the war. A mixed bag for tech. Salesforce gives a tepid outlook while Snowflake reports blowout numbers and an Amazon deal. And traders brace for the latest read on U.S. inflation, PCE numbers on deck, personal income and spending as well. Let's get a check on markets around the world now. We'll start with Winnie Zhu for the latest from Asia. Winnie.
Good morning, Bonnie. We're seeing Asian stocks taking a bit of breather today, especially with these mixed signals from the U.S.-Iran conflict driving oil prices higher. Now you see the MSCI Asia here down nearly 1%, actually coming after 5 straight days of gains. And in fact, leading the declines today, we see shares in Hong Kong also dragged down by these e-commerce giants that are struggling with intensifying competition among themselves. Now, flip the board and take a look at the South Korean market, because here we have the Kospi here off that record high, with the Korean won also coming under pressure, with this stronger U.S. dollar weighing on the currency as well. Now, we had the Bank of Korea keeping rates steady today, but the tone was slightly hawkish, especially as we have 2 out of 7 members voting for a rate hike, with the central bank also raising its forecast for both growth and inflation. Hence, we're seeing bond yields here tracking further higher.
All right, Winnie, thank you so much. That is a Bloomberg Asia Equities reporter, Winnie Zhu. Have to give Paul Donovan credit this morning for the best note title. He says, firing, not ceasing. And that's exactly what is being reflected in these markets. Not a ton of stress. At the same time, there is this idea that the ceasefire, which the U.S. says is still in effect, might be a little more fragile than we thought. So we have Brent crude higher now once again today, up by about $2. That said, if you look at the December contract, we're not seeing much stress. It's still trading below $80 a barrel. Stocks Europe 600 down about 2/3%, reflecting marginally lower across Europe for the major indices. And we are seeing yields higher in Germany, so a little bit of selling in German bonds. We'll see the same thing in the United States when we look. Crude, again, same picture. We're back above $90 a barrel, but this is not the war on trade, right? This is just kind of a liminal phase between war off and war on. S&P futures pointing to a small decline, but remember, we hit another record yesterday, eking out that record on the S&P. Nasdaq 100 futures pointed lower. And if we look at bonds, once again, we are seeing just a little bit of air coming out of treasuries, with that 10-year yield about 1.5 basis points higher. Gold down 1.5%. We're well below $4,400 now. And the VIX just ever so slightly elevated. We're still trading with a 16 handle. All right, for some stocks to watch, let's get to Chloe Melly in London. Chloe.
Good morning, Vonnie. The software company Snowflake is soaring in pre-market trading this morning, up more than 35%. It announced results that beat expectations, it raised its guidance, and it also announced an expanded collaboration with Amazon Web Services. So this points to very resilient results and very resilient AI offerings as well, which is very reassuring for investors given those competitive threats from AI on that software sector. So we're up very, very strongly there. We're also seeing the drone company Unusual Machines rally this morning very strongly after a report from the Wall Street Journal that the Trump administration is looking to fund some of those U.S. drone companies. And of course, that could be a huge boost for the likes of Unusual Machines. And we're seeing that reflected in that share price this morning, up about 34%. And finally, let's end with another positive mover. We've got Dell winning a $9.7 billion contract to help the U.S. military streamline and consolidate all of its Microsoft software. And so it'd be a bunch of competitors to get this really big contract, this big deal, and we are seeing the market reward that, and we're up about 5% for Dell Technologies this morning.
And we're also waiting on Dell earnings. Big day for Dell. Chloe, thank you so much. Chloe Melly there. Coming up this hour, Michael Sneyd of BNP Paribas talking to us about this market. But let's kick it off with the latest out of the Middle East. The U.S. saying it struck Iranian military targets for the second time this week as negotiations for a peace deal remain fragile. President Trump commented on the main sticking point, control over the Strait of Hormuz, during a cabinet meeting yesterday.
The strait's going to be open to everybody.
And who would control it?
It's international waters. Nobody's going to control it. We're going to watch over it. We'll watch over it, but nobody's going to control it. That's part of the negotiation that we have. They would like to control it. Nobody's going to control it. It's international waters, and Oman will behave just like everybody else, so we'll have to blow them up. They understand that. They'll be fine.
Jumana Bersecci, author and anchor of Bloomberg Horizons Middle East and Africa, joins us now. Jumana, the US insists that the ceasefire is holding in spite of these strikes. Iran insists there have been multiple violations. Where do we stand on any kind of continuation of the ceasefire?
Well, certainly the ceasefire has been tested for the second time this week. This is the second day or second time this week that we get an incident on the street. A U.S. Central Command saying that they shot down 4 unarmed drones that were being directed towards a U.S. commercial vessel. They shot them down. They also went on to target a drone launching site around the port of Bandar Abbas, which is very close to the Strait of Hormuz. But the U.S. also saying that they had acted in a defensive capacity, that this does not constitute a full violation of the ceasefire. The ceasefire is still in place. Now, Iran, for their part, also retaliating. IRGC is saying that they would have to respond to these types of aggressions. And around the same time, in the middle of the night, we also heard of air defense systems in Kuwait being triggered too. IRGC saying that they had fired back at a military base. So there hasn't been any confirmation that the response had been directed towards Kuwait, but perhaps you can infer in light of the events overnight. So the bottom line is we did get another incident around the Strait, but where we are this morning, neither side is showing an inclination once again of taking this one step further. And I think President Trump had ample opportunity over the course of the last weeks or so, last few weeks, to go down the path of resuming military operations. He has not done that. And the takeaway from all of this is, in the background, while we are seeing these skirmishes on the Strait, negotiations are still ongoing. And you're seeing a big push, this time out of Qatar, who are emerging as a more forceful mediator in that respect, to get the breakthrough that the market has been looking for. And specifically, this one-page memorandum of understanding that would allow for the unconditional reopening of the Strait, and then later on, at some point, discussions around the nuclear file. Now, whether this entails a 30-day, 60-day ceasefire, we don't have full details. But President Trump once again maintaining that the U.S. are not going to offer extensive economic relief in exchange for the reopening of the Strait. So the sticking points are still the same as they were, Vonnie.
We're not seeing a huge amount of stress in the oil market. Definitely movement over the last couple of days, but we're not even close to the $100 a barrel mark. Jumana, does this suggest that there is, in fact, oil getting through and the market knows this, or are we still pretty closed?
Well, this is something that I think many analysts and industry experts have been discussing, but bottom line is this is also a market that is trading on hopes of a breakthrough. There has not been an actual breakthrough, and you don't have to go that far. It's still very headline driven. At one point yesterday afternoon, Iranian state TV published what they said was a framework for an agreement between the U.S. and Iran, saying that they would, within 1 month, fully open up the Strait, that Iran and Oman would have joint monitoring of what goes on around the Strait. In exchange for that, the U.S. would withdraw fully from the region. You saw oil retreats on that. Of course, it was denied by the White House later. President Trump once again saying that these are international waters and they will continue to make sure that the U.S. will watch over it and that Iran and Oman will not establish this new protocol. But ultimately, I think the oil market is pricing in for that normalization. And if you look at later dated Brent futures, like towards the end of this year, we're trading closer to $80, which is, the market's expectation that things at some point will resume and that the free flowing of vessels through the Strait will be returning in the next couple of months. But again, that's a big assumption.
Yeah, exactly. Jumana, thank you so much. Jumana Bersecci there, anchor of Bloomberg Horizons, Middle East and Africa. Turning to earnings, as Chloe mentioned, Snowflake posting stronger than expected outlook for revenue, and Salesforce forecast, well, it was tepid. Matt Bloxham of Bloomberg Intelligence joins us for more on those results. Talk to us a little bit about Salesforce. Is it managing to prove that, Anthropic, OpenAI, even the hyperscalers' AI models, that they're just not enough, that Salesforce can do better for business?
Yeah, I think the kind of answer question with Salesforce continues to be how they're pivoting their legacy software into the AI era. And they've got this product Agentforce, which is their solution, and it's gaining traction, but it's still kind of relatively modest. They're talking about an annualized revenue run rate of about $1.2 billion. Now, in the context of a kind of $46 billion business, that's not much. And I think analysts are still looking for momentum to pick up more significantly. Now they're talking about that in the second half of this year, but I think it's still a bit of a wait and see, and I think there's still a lot of question marks there about whether they can successfully manage this transition into an AI-led world. And obviously there's a lot of new competition out there with some companies looking to shift their CRM platforms to kind of new AI-based partners.
Yeah, CRM down 33% year to date, Matt, a real whack for that stock. Let's talk about Snowflake for a second. So it could lift sentiment across software, but there is this deal with Amazon. Is that what's causing investors to be so enthusiastic about Snowflake?
Yeah, I think so. I mean, obviously, they kind of gave a slightly more encouraging outlook for kind of full year sales, and I think particularly also on the kind of profit guide too. But I think that the kind of real sentiment boost here is the $6 billion 5-year agreement they've announced with Amazon Web Services. I think that that essentially is confidence from the management team that they see a very robust forward pipeline, and they're willing to commit that level of investment to kind of grow the business going forward. So I think the near-term numbers, they're a little bit better than the market was looking, but not much. But it's that kind of mid-term confidence they give with that new contract.
Yeah, but it's essentially that CapEx optimism again, isn't it? Just in a different sphere. I want to ask you about HP and whether it's a red flag, because it did give a profit forecast for the current quarter that signals they're contending with a huge increase in memory chip prices, as you might expect. Is this the beginning of the end, though? Is memory prices going to bring this trade to an end?
Well, it still seems that the memory price is going to continue to rise through the rest of this year. So I think this is a cost pressure that many businesses are going to be facing for some time. It seems that HP are doing a fairly good job of passing those costs through to their customers and diversifying their supply base. There is perhaps a little bit of a squeeze on margin, but not much. I think also here with HP, there was a sense that perhaps some of their customers had brought forward demand, so kind of building their inventories in anticipation of price increases later in the year. So that may well mean that there's a little bit more softness in the second half of the year than people were expecting. So things maybe just kind of balancing out a little bit differently through the year than people thought.
All right, Matt, another round of earnings, and we're almost there, Dell, later on as well. Matt Bloxham of Bloomberg Intelligence, thank you. Now to other top stories trending on the terminal this morning. Perella Weinberg is cutting almost 10% of its workforce, including a dozen partners. Bloomberg sources say the dismissals will be concentrated in industry subsectors that have lagged the broader market. The move is part of Perella's attempt to channel resources into higher performing areas of its business. Wall Street banks are signaling another blockbuster quarter for trading. Bank of America predicts second quarter sales and trading revenue could climb 15% from a year ago. JP Morgan CEO Jamie Dimon says markets revenue at the bank could rise 11%, which would make it the second best quarter ever for that business. Some U.S. liquefied petroleum gas buyers are cancelling cargoes to Asia after the conflict in the Middle East sparked a surge in freight rates. At least 2 July shipments from the Gulf Coast were scrapped, with more cancellations possible. The U.S. to Asia freight shipping cost is at its highest in 6 years. Coming up, we're going to be hearing from Mistral AI CEO Arthur Mensch on the company's expansion into physical AI. This is Bloomberg. French startup Mistral AI is expanding into advanced manufacturing and striking new deals. Bloomberg Tech Europe anchors Tom McKenzie spoke to the company's CEO, Arthur Mensch, in Paris.
For us, it's a massive market. We see, in particular, Europe is our anchor market, but one of the European the strength of Europe is in its high-end manufacturing. So it's the manufacturing world is the 30 trillion market. If you think of the uplift that AI can bring to it, if you only look at 10% of that, you're looking at a $3 trillion market, and that's happening in the next 5 years. But you also need to have models that deeply understand the physics of the world, that deeply understand how real objects are functioning, and that deeply understands how to control those objects. So you have a design problem where you want to understand the fluid dynamics when you're doing plane design, for instance, but you also have an operational problem when you're trying to optimize your process for your factories. So the total addressable market of that is in the trillions, and you need a unique combination of skills. So coming from artificial intelligence, but also coming from the domain itself. And those are the skills that we are gathering together today and that we are going to continue to invest in.
And this is also Mistral going full stack. So you're going to have data centers, you're going to have the models, you're going to have the applications, you've got the forward deployed engineers. What is the strategy behind going full stack?
And in order to provide business continuity to our customers, we need somehow to host the systems in a way where we can guarantee that whatever happens, we are going to keep the switch buttons is under our control and is a button that we can put under the control of our customers. So that has naturally brought us to expand toward infrastructure. In that our business is to transform intelligence into tokens. Really, we take electrons and we transform them into intelligence. And in order to do that, we need the models, which is the thing we started with. We need the forward deployment engineering because you need to understand the problems you want to solve. But at the end of the day, you need to host the model in a place that you can control, in a place that we can put the control under our customers. And so that brought us to create capacity. We're announcing today a new site in Les Ulis in France, and that is part of our roadmap to build 200 megawatt by the end of 2027 and a gigawatt by the end of 2029.
Arthur, I think of data centers, I think of infrastructure, and I think of CapEx. How much is this going to be costing you, and does it push out further into the future your targets around profitability?
This is effectively CapEx. So we're talking about billions in CapEx. Basically, 100 megawatt costs you around 5 billion in CapEx plus OpEx over 5 years. So that's the kind of scale that we are dealing with all the way to 2027. So that's around 10 billion. Mm-hmm. Is it pushing profitability? No, I would say our business is we're continuing to invest, and so we're of course fronting some CapEx investments, some people investment as well. But what we see is that the value creation that we're bringing to customers is really worth the investments.
Is Mistral still on track for what is it? We're looking at $1 billion of annual recurring revenue this year. Is that target still achievable?
We're still on track. Absolutely, we intend to beat it.
You intend to beat it by a significant amount?
Well, I would say $1 billion. We're still announcing $1 billion by the end of this year, and so that's driven by all of the growth that we see on the software and on the solution side, going for the mission critical workloads of our customers, and also driven by the infrastructure deployment that we're doing. And
should we assume that with those acquisitions, with that cloud build out, the data center build out, that you will be fundraising again this year?
We do not need to, but we're starting to see a lot of demand, so that's definitely a possibility.
So it sounds like fundraising this year is likely, additional fundraising this year.
I would say it's as likely as it is not, yes.
That was Mistral CEO Arthur Mensch speaking to Bloomberg Tech Eurobanker Tom McKenzie. This is Bloomberg. Featuring a new book just hitting the shelves now. During the chaos of Cambodia's civil war in the late 20th century, priceless treasures of the ancient Khmer Empire were stolen and sold to elite collectors. Bloomberg senior reporter Matthew Campbell's book, The Man Who Stole the Gods, unravels how investigators tracked down a former child soldier whose theft of these treasures drove a global art conspiracy. Matthew joins us now. I'm pleased to say, Matthew, it's your latest book. It's another phenomenal read. It spans everything from history to crime to investigations. It essentially revolves around two men, one in the SDNY and a lawyer in Cambodia, and then a third protagonist. Tell us more.
So the book tells the story of this remarkable US-led investigation into this enormous stolen art ring, basically, and it was co-led by federal prosecutors in New York City and an American lawyer who has been living in Cambodia for a long time. And they eventually tracked down a former Khmer Rouge child soldier turned master art thief living in retirement, essentially, and convinced him to share his story and reveal what he had done.
And this man who had been a child soldier, Tok Tik, he had not necessarily gotten rich from this, but somebody else had, and he had done a lot more than just getting rich. He basically ran a conspiracy.
There had indeed been someone who got quite wealthy from all this, a British art dealer named Douglas Latchford, who lived in Bangkok for most of his adult life. He ended up as the leading dealer of these amazing artworks, particularly into the US market and particularly into very wealthy collectors here in New York City and museums like the Met.
And the story doesn't end with this child soldier, which, by the way, it was amazing to find. It's amazing these people are still alive and can tell the tale and have such clear memories, but also so many works of art were recovered. How many works of art were stolen from Cambodia?
We don't actually know. The best guess in the course of the Cambodian Civil War, which went for 30 years, from the late 1960s as an offshoot to the Vietnam War, all the way to 1998, is that we're talking probably about thousands, if not tens of thousands of artworks that were looted, in many cases by the Khmer Rouge, and a huge proportion of them ended up in the United States.
Well, it is a phenomenal read, and it will keep you busy for hours. I would suggest everybody buys The Man Who Stole the Gods on your shelves now. That's Matthew Campbell, Bloomberg senior reporter. It's 5:30 a.m. in New York City, 10:30 a.m. in London. Good morning, I'm Bonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. Fresh attacks in the Middle East. The US strikes Iranian military targets for the second time this week. Stocks slip on doubts over an imminent end to the war. Mixed bag for tech. Salesforce gives a tepid outlook while Snowflake reports blowout numbers and an Amazon deal. And traders brace for the latest read on US inflation. April PCE on deck. Let's take a look at these markets. Then S&P futures and Nasdaq 100 futures pointed to small declines. It's across the board, but we did eke out yet another record on the S&P yesterday, so that's where we're starting from. We have oil rising. WTI is above $90 a barrel, but it's not so high. It's just the market reacting in a fairly muted way to these continued strikes. The US insisting that the ceasefire is holding, and as Paul Donovan of UBS says, firing not ceasing. We'll see if that continues. We're seeing the December contract on Brent and on WTI trade below $80 a barrel, so not too much stress in the oil market, too much extra stress, let's say. And then in terms of bonds, we are seeing yields come up just slightly, 449.26. We're off our highs of the day, though, across the board. We did start the session with maybe a little bit more trepidation than we are continuing through the session. Gold below $4,400 an ounce, and the VIX, well, it's ever so little higher, but really, still below 17, signaling pretty much all is calm out there right now. Let's get to some individual movers. Over to London and Chloe Melly. Chloe.
Good morning, Bonnie. The software company Snowflake is rallying this morning after providing a stronger than expected forecast and also announcing a $6 billion deal with Amazon. And so this is, of course, very reassuring for investors, given that we're still dealing with some of those worries about AI displacement in that software sector. But it seems that Snowflake's AI offerings, and in particular the launch of its own coding agent, are working very well, are being very positive developments for the company. And we are seeing that reflected in that huge rally this morning for that company. Moving on to another big mover, and that is Unusual Machines, the drone manufacturer, which is up after the Wall Street Journal reported that the Trump administration was looking to fund some of those US drone companies. And so we're up almost 35% on the back of that, because of course that will provide a huge boost for that firm. And finally, we have also got Dell Technologies, which is also in the green this morning. It signed a $9.7 billion contract with the US military to help it streamline and consolidate all of its Microsoft software. And so it'd be a bunch of different competitors to get this big contract. And we're seeing that really boost the shares, drive the shares this morning. And we're up about 4% for that stock in pre-market trading.
And up 142% year to date already, Chloe, and we have earnings later on as well. That's Chloe Melly there, and we thank her. We get the Fed's preferred inflation gauge in a few hours. April's PCE data out at 8:30 a.m. Personal income and spending as well. Traders bracing for a hot print on PCE. Joining us now is Bloomberg's Balazs Pence. Balazs, what will we learn today about the pass-through effects of this oil price spike that we saw at the beginning of the war?
Well, as you said, the PCE is often called the Fed's favorite inflation measure, or its most closely watched measure, and that's because it measures consumer spending, not just price levels. And of course, we are heading into the first rate decision with Kevin Warsh as Fed chair, and a lot of people, the president included, have thought that that would usher in a more dovish period of Fed policy, but it doesn't look like the PCE will allow that or will be a dovish signal. The consensus estimate now says that it will be a 3.8% rate, which would be the highest in 3 years. Now, that is, of course, partly the effect of the energy price shock in the aftermath of the war in Iran. But more worryingly, the core PCE rate is also tipped to tick up a little bit to 3.3%, which suggests a pretty sticky inflation, a pretty sticky demand, which will make it very difficult for the Fed to lower rates, even as we look forward to the rest of the year.
Yeah, I mean, it seems quite elevated, Balazs. I mean, at what point is there a level at which Fed policymakers will get worried about inflation expectations getting unanchored?
That's right. These numbers and all the previous numbers that we have had suggest that consumer demand in the U.S. remains robust, that prices remain elevated. They're actually going up right now. So now a lot of people are questioning whether there will be actually room to lower interest rates this year. We have even heard a few voices suggesting that if this trend continues, they might have to consider raising interest rates, which is, of course, the opposite of what Kevin Warsh has talked about when he was discussing the job, when he was coming into it, when he told us about his preferences. So it's very interesting to see what this number is going to look like and how the Fed is going to react to that.
Yes, and of course we get payroll data on Friday as well, which will be another part of the puzzle. Balazs, thank you so much. Bloomberg's Balazs Pence there. Joining us now is Michael Sneyd, Head of Cross-Asset and Macro Quantitative Strategy at BNP Paribas Markets 360. Michael, thank you so much for joining. Is the macro outlook binary in the sense that, if war subsides, the Strait of Hormuz reopens, oil goes down, US growth is protected, and yes, maybe there's a tail end of some inflation or inflationary forces, but generally all is good, or the opposite? Or is it a little bit more nuanced than that?
So we think it's more nuanced. Good day to you, Bonnie. So we think it's more nuanced. In particular, you're seeing kind of underlying trends in economic activity, particularly in the tech sectors, kind of causing some kind of differentiation from what's happening with the Strait of Hormuz and energy. I think also what's very key is the market has continued to anchor onto optimism that there will be a reopening of the Strait before we have a substantial drawdown of inventories, which could start to cause some supply issues. So we think the situation, is reasonably nuanced, and against that backdrop, we're actually still remain quite positive on risk and positive on equities.
Yeah, I mean, we were just talking about the PCE deflator that's going to come out later, personal income and spending, and Kevin Warsh and his dilemma, potentially. Not sure if he sees it as a dilemma, but what are you guys thinking that he will do? Is he going to reduce the balance sheet and have that take care of inflation, as he says will happen? Or might he actually consider hiking?
So we think that a few things on this. So one is we think the balance sheet will be gradually reduced, but that's probably not going to be enough to kind of necessarily tighten financial conditions if there was deemed to be inflation concerns in the market. We think in terms of Kevin Warsh himself, when he leads the committee, we have to keep in mind that it's a committee of decision makers. And those decision makers have a variety of views looking at different aspects of the US economy. So we don't expect him to be the kind of key decision maker. And then maybe perhaps linking the pricing that we're seeing in the markets, and the market starting to put greater weight on perhaps the next move from the Fed being a hike. If we think about that from a kind of a market regime perspective, the market pricing is really a reflection of the strong US economic data. And this we define as being an expansion regime. And in that type of regime, you can have yields heading higher whilst risk assets continue to perform well.
So you sound broadly positive. You say your outlook is broadly positive, but what to do about something like this? So Ed Yardeni pointing out today that Micron earnings per share revisions alone account for 51% of the S&P 500 earnings revisions since February 27th. Is concentration risk not something that we should be well aware of and protecting ourselves against, Michael?
So I think as a portfolio manager, there is a need to be very much aware of that concentration risk. A strategy that's been very popular is to be long the kind of momentum factor, or just long the S&P being market cap weighted, puts you in more kind of tech exposure. But I think it's also important to think about some of the economic justifications of some of these moves that we've seen in the tech sector. And we think when we look at the impact of AI on the real economy, that actually some of these valuations, some of the rise of the earnings expectations, it can be justified. I mean, to give you an example, we think that the impact of AI on productivity on the US economy alone could add up to 10% of GDP over the next 8 years. That's our top line estimate. But once you start to think about it from the kind of bottom up economic impact, actually some of these earnings expectations, some of these valuations do not necessarily look quite so lofty.
So the fact that downside protection is being priced so cheaply, you say that's also warranted then?
So we think that investors do need to focus on having protection in their portfolio. I think in particular, at the moment, we think that bonds are not going to be a source of safety within a portfolio. If anything, they could be a source of uncertainty because there is still likely to be lingering inflation concerns, lingering fiscal concerns. So what that means is that when investors are thinking about risks, which we think they still need to very much consider, they need to think about protection, and they probably need to pay a bit for that protection. So paying, for example, a bit of premium in order to buy out-of-the-money put options on S&P.
You also think other jurisdictions look a little attractive. So, for example, Europe at the moment. But I'm not sure I follow, because if the US is growing and you're very positive about US and AI and so on, I mean, Europe is not growing at the clip of the United States. So why would you be so positive on Europe then?
So a key part of the European story at the moment is really about sentiment and positioning. The market is quite bullish and is owning US stocks. When we compare that to our indicators for Europe, we see that actually European stocks are still very lightly owned. So this gives a chance for a kind of a catch-up effect of European stocks. We also note as well that earnings expectations in Europe have been heading higher, not to the same degree in the US, but we think that rise of earning expectations combined with the very light positioning does give scope for European stocks to recover over the coming months, particularly if we have a peace deal in the Middle East.
All right, Michael, thank you so much. Michael Sneyd of BNP Paribas. Appreciate it. Now to other top stories trending on the terminal this morning. A Google software engineer was charged with insider trading after he allegedly made more than $1 million on Polymarket by betting on one of last year's most popular internet searches. The engineer had access to company data that tracked user searches when the bet that Google's most popular search of 2025 would be the singer David. President Trump filed a new version of his $10 billion libel lawsuit against the Wall Street Journal and its parent company News Corp. The suit was filed over a July 2025 story that said Trump sent Jeffrey Epstein a bawdy birthday note in 2003. The original complaint was dismissed for lacking sufficient claims that the story was filed with, quote, actual malice. Fed Vice Chair Philip Jefferson says he expects inflation to ease later this year as the effects of tariffs and higher energy costs fade. But he warned inflation risks still lean to the upside. Speaking in Tokyo, Jefferson also said that the Fed's current policy stance is well positioned ahead of next month's meeting, the first under new chair Kevin Warsh. Coming up, oil spikes after US forces shoot down Iranian drones and target military sites. This is Bloomberg.
Is the U.S. considering easing sanctions on Iran to allow Iran to sell its crude to market?
No, we're not talking about any easing of sanctions or giving money. No sanctions, no money, no nothing. We have control of money that they claim is theirs. We'll keep control of that money. When they behave properly and when they do what's right, we'll let them have their money. But right now, we're not doing that, and it's not, one thing is not contingent on the other.
President Trump answering a question there from Bloomberg's Tyler Kendall after Iran suggested lifting sanctions is part of negotiations. Overnight, the US struck Iranian military targets as peace talks remain fragile. Bloomberg government senior White House reporter Mika Solner joins us from Washington. Mika, bring us the latest. It's very difficult to know what's going on behind the scenes versus what we're hearing publicly.
Yeah, absolutely. I mean, the ceasefire right now that the Trump administration is aggressively pushing for is extremely fragile, as we know, with the latest launch of U.S. strikes in Iran. I think that this is causing a lot of confusion among lawmakers and people within the White House in terms of where things stand. The president is also caught between kind of a difficult spot here between these defense hawks and Republicans that really want him to continue on with the operation, and those who say it's time to end this and end this well. I know that the president is really adamant on getting the quote-unquote best deal he can, as he laid out yesterday, but it's really unclear what exactly that looks like. He has said that he does not want Iran to have a nuclear weapon. Iran has clearly denied that that's the case, but you know, we're going to have to see more of a framework here, maybe this week or next.
Meantime, the president obviously very focused on, what's coming up in November. His approvals are really at an all-time low, and congressional Democratic leaders just lost a bid for a court order to block the Trump administration from prohibiting mail-in voting for anyone not on a pre-approved list. So after some of the losses from the primaries, this was at least a little win for the administration. Is that a correct interpretation?
Yeah, the president has had some very strong legal challenges against Democrats lately, the latest being the mail-in ballot voting. Essentially, this gives DHS the authority to allow mail-in voting only for people deemed on a certified list, ideally looking at citizenship records, etc. And this is another push by the president to try and curb some of the voting laws and create some more restrictions and emphasize the fact that they want only U.S. citizens to vote in elections. Of course, that's already in law, but this stems back to the 2020 election where President Trump has still has said that there was fraudulent activity in that election.
Mika, he said that, at least in regards to Iran, he doesn't care about the midterms, right, that one isn't impacting the other, but he necessarily must be thinking about the impact of what's going on in Iran and the fact that we still haven't come to any kind of an agreed truce or anything like that, and what that will do in voters' minds.
Yeah, absolutely. I mean, the war remains very unpopular among the public, and it continues to have a huge economic impact, not only in the U.S. but worldwide. But speaking with two Americans' pocketbooks, gas prices have gone down slightly, but there's still a huge issue for a lot of people. It's also costing consumer goods to go up. So the administration really has to get a handle on this, especially ahead of November. I mean, we're only roughly 6 months out from the midterms. I know that the president right now is confident because he's had these winning streaks in these primaries, but the general election is going to be a totally different question.
Yeah, and we're only just back below $4.50 a gallon after a good 3 weeks above that. Bloomberg Government's Mika Solner, thank you so much for joining. Turning to earnings now, Snowflake shares surging in pre-market trading after posting a stronger than expected outlook. Salesforce is lower though. Tepid forecast, perhaps, there. Matt Bloxham of Bloomberg Intelligence joins us for more on those results. Can we start with Salesforce, Matt, and whether it portends anything for other software companies? Any ray of hope at all?
Maybe a glimmer. I mean, obviously, Salesforce is one of these legacy software companies which people are looking at to see whether they can transition into an AI-led environment. And they're making some progress with their Agentforce AI tool, on track to kind of generate annualized revenue of about $1.2 billion. But that's just a few percent of their annual $46 billion revenue. So, there's still a long way to go for them to demonstrate that they really are successfully transitioning into an AI future and that they can kind of protect their very well-established position in the CRM marketplace. Still some work to do, I think, there.
Snowflake, on the other hand, soared. So the results were good and everything, but it was really this Amazon deal that seems to have sparked investor appetite, a $6 billion deal. But it's essentially Snowflake promising to spend. So CapEx once again, no?
Yeah, that's right. I think that the numbers themselves were good, and the guidance was a little bit above expectations and a positive surprise on the margin. But yeah, the $6 billion commitment to invest more with Amazon Web Services, I think for the market really giving a strong signal that management is confident in the midterm revenue runway that they have. So yeah, as you say, it's incremental investment, but clearly tied very much to clear revenue generation in the future. And so I think that's kind of boosting the market's confidence in the midterm outlook for the company.
A separate issue now, and that is memory costs. How are companies dealing with it? Because we've seen a variety of reporting. Some companies seem to have been able to eat the higher cost of memory, no problem, right? They just disappeared and margins just came out the same and as everyone was expecting. Other companies, not so much. HP is the most recent one, signaling that they're, finding it a little difficult.
Yeah, and I think actually what we heard from HP kind of shows the full range of tools that companies are looking to deploy to kind of combat the memory price increase. So the first is obviously increasing their own prices to end users, which HP is doing to with some success. The second is kind of really shifting to products that don't really use so much memory, and so that's a kind of another way that they're trying to kind of balance this out. So I think there's a number of techniques companies can do with kind of varying degrees of success. Obviously, some bigger companies which have much bigger buying power in the market have done a good job of building up inventory, so they're actually kind of able to kind of delay and absorb that memory price increase because they're not really yet seeing it in their own input prices. So I think that's going to maybe push out the margin squeeze story into the kind of second half of this year and perhaps into 2027 for some.
Matt, some of these legacy companies like Dell, I'm thinking they can do no wrong these days. It won an almost $10 billion defense deal. We got that word last night. We're waiting on earnings later, and it's already up 140+% year to date. Is there anything Dell could say that would disappoint investors?
I think with a lot of these companies discuss really just that nuance of kind of the kind of momentum in the business and whether they can kind of say enough about the kind of forward outlook that kind of really gives you that incremental expectation of midterm scale. I think a lot of these share prices are already anticipating significant midterm growth, and so you need to kind of keep that story bubbling away. So yeah, it's kind of really about the nuance. And again, it may well be that if they signal additional investments in the business, that would be a strong sign that management sees a really good midterm outlook.
All right, we shall see. Matt, thank you so much. That is Matt Bloxham of Bloomberg Intelligence. Coming up, economic data and the earnings you need to watch as we get you set up for your trading day. This is Bloomberg. This is Bloomberg Brief. I'm Bonnie Quinn in New York. Now a look at what's ahead for today. We get PCE, personal income and spending, out at 8:30 a.m. Eastern for a look at secondary effects of the oil price spike. Earnings from Best Buy, Kohl's, Dollar Tree, they all come before the bell. And then we get Dell, Gap and Costco after the market close. So still a busy day for earnings. And then we get plenty of Fed speak. We have John Williams on deck. Also, Alberto Musalem joins Bloomberg's Balance of Power at 1 p.m. New York time. You don't want to miss that interview. This is how we're shaping up into your Thursday session, then, with Brent crude trading higher but not at panicked levels, and December's contract below 80 still, so that'll tell you even after the strikes. The market with a muted reaction. The 10-year yield just actually off its highs now. It was up a couple of basis points earlier and we're basically just flat now, and S&P futures pointing to small declines. That's it for Bloomberg Brief.